Chapter 2, Accounting Equation and Accounting Classification. This topic consists of the following. First, element of financial statement. Second, statement of financial position and classification of item. 3. Basic accounting equation. 4. Effect of transaction on the basic accounting equation. 5. Expanded accounting equation. And 6. Effect of transaction on the expanded accounting equation. There are 5 elements of financial statement. 1 is statement of financial position. 2. Statement of profit and loss. 3. Statement of changes in equity. And 4. Statement of cash flow. And 5. Notes to the account. But for this chapter, I will focus on the statement of financial position only. So, let me explain briefly about the statement of financial position. So, what is statement of financial position? It is a statement that reports the total amount of assets that are owned by the business and the amount of capital contribution from the owner and liabilities on a given date. Statement of financial position is used to show the status of financial well-being of a company, and it is formatted like accounting equation. So, the accounting equation that represented in the statement of financial position is asset equal to owner equity and plus liability. So, if you can see from the example of the statement of financial position for Super Supreme Enterprise, you can see the element of the statement of financial position consists of asset, owner equity, and also liability. So the total asset will always be the same with the amount of owner equity plus liability. Total asset in this example is 316,450, and the total amount of owner equity plus liability is also the same with the total asset, which is equal to 316,450. So in this example of statement of financial position, the asset is on the top of the statement, followed by the owner equity and then the liabilities. Now, let me explain about asset. So what is asset? Asset is resource used by the company to produce product or to provide services to generate revenue for the business. Asset can be divided into 2 categories. One is non-current asset and another one is current asset. So what is non-current asset? Non-current assets are assets acquired or bought not for resale, but to be used in the operations of the business with a useful life of more than 1 year. non-current assets are divided into three categories. One is tangible non-current asset. What is tangible non-current asset? Tangible non-current asset refer to non-current assets that have physical substance. For example, land and building, machine, equipment, furniture and fitting, motor vehicle, and etc. 2. Intangible non-current asset. So what is intangible non-current asset? It refers to non-current asset with no physical substance. For example, franchise, trademark, patent, and goodwill. Now, let's look at the third category of non-current assets, which is investment. What investment mean? It is refer to the sum of money placed in other organization in the hope of getting more money in the form of return, which is in the form of dividend or interest. For example, quoted and unquoted investment and fixed deposit. Now, let's move to the second category of asset. The second category of asset is current asset. Current assets are assets that are either cash or can be converted into cash within 1 year. These assets constantly change in their form during an accounting period. Examples of current assets are inventory or stock, account receivable or debtor, cash at bank, and cash in hand. And what is owner equity? Owner equity represents owner supplied fund to the business for the acquisition of asset for the business. It is the financial obligation of the business to the owner. Profit will increase the capital or equity of the business, whereas losses and drawing will reduce the capital of the business. Drawing occurs when the owner uses whatever asset of the business for personal means. Thus, owner equity is represented by capital that has been adjusted, taking into account profit or loss of the business and any withdrawal made by the owner. That is, owner equity is equal to capital plus profit. But if there is a loss, capital need to be minus with the amount of loss. And then you have to minus with the amount of drawing. Now, let's move to the liabilities. So what are liabilities? Liabilities refer to the fund supplied by external parties to the business for the acquisition of asset. It is therefore the financial obligation of the business to external party. There are two types of liability. One is non-current liability. Non-current liability are amount owed by the business that are not repaid within 1 year. For example, long-term loan, mortgage on premises, and debentures. The second category of liability is current liability. Current liability refer to the amount owed by the business that are to be repaid within 1 year. For example, short-term loan, bank overdraft, creditor, or account payable. So, what is the purpose of statement of financial position? So, the main purpose of the statement of financial position is to show the financial position of a business in terms of its asset, liabilities, and capital at certain date.